Hey everyone, welcome to another episode of Primary Market Chatter brought to you by Sunday Investing. This is the January first week edition. We are in a new year. Happy New Year to everyone. So what we do is we essentially review the companies from a fundamentals perspective and tell our read that how are we finding these companies from a fundamental perspective and try and remain as much neutral and unbiased from the GMP as possible. So we'll just get started. Before that, there are a few obvious things that I want to highlight. One, I think I have said this enough number of times, but just want to repeat it if someone's listening us for the first time or if someone has an issue. We are not SEBI registered research analyst and none of our read is a qualified opinion. हम लोगों का जो भी हम यहाँ कह रहे हैं दैट्स नॉट अ क्वालिफाइड ओपिनियन. डेफिनेटली आप भी अपना ड्यू डिलिजेंस करें एंड डू नॉट टेक आर अप्लाई और नॉट अप्लाई डिसीजन एज अ recommendation. We are not recommending. We are primarily sharing what we are planning to do with our own strategy. But that in no way is a qualified opinion, as I said. So आप बस इसको as a supplement use करें and definitely do your own due diligence as well. Having said that, the next thing which I want to highlight is if someone is listening to us for the first time, हम लोग YouTube पे भी अपनी ये स्पेसेस डाल देते हैं जहाँ पे हम कैटेगराइज करके कंपनीज को डालते हैं. सो आप if you are not following us on YouTube, the link is in the pinned comments. Definitely आप YouTube पे भी follow करें हमें and basis that take like you can listen to the companies at your own will. Having said that, just want to set up today's call. So Jan first week, दो छोटे मेन बोर्ड आईपीओ आ रहे हैं, एक इन्वेस्टमेंट ट्रस्ट आ रही है और 6 एसएमई आ रहे हैं. सो इन टोटल 9 इश्यूज. हम पहले वी वर होपिंग टू डू ऑल 9 ऑफ देम टुगेदर, बट देन वी रियलाइज दैट इट वुड प्रोबेबली बी टू मच फॉर एवरीवन टू टेक एंड फॉर अस ऑल्सो टू प्रिपेयर, क्योंकि 9 कंपनीज के बारे में वन गो बात करना ऑन अ संडे इवनिंग वी थॉट is slight disservice to ourselves as well. So हमने इसको 2 पार्ट में डिवाइड किया है. So आज हम एक स्पेस करेंगे एंड उसके बाद प्रोबेबली ट्यूसडे या वेडनेसडे को क्लोजर टू द डेट हम बता देंगे उधर एक और स्पेस करेंगे. So आज हम 5 कंपनियां कवर करने वाले हैं. The 5 companies that we'll be covering with and the order in which we'll be covering them with is we'll first start with a couple of SMEs, DavinSons and Indobell, and then we'll go to FabTech and Parmeshwar Metal, and then we'll end with Standard Glass. So that is the order for the day. We'll be covering these 5 companies and basis that जो भी IPOs वेडनेसडे तक आ रहे हैं हम उन सबको कवर कर लेंगे ताकि हम अगली स्पेस या तो वेडनेसडे को कर पाए या फिर ट्यूसडे को रैप अप कर दें. We'll see how it goes. But that's the idea for the day. With that, maybe we can move forward and start with the companies for the day, unless Tanmay, Rohit, Yash, you guys have anything to add. Can you all say something so that I can...
Nothing to add.
Perfect. In the meanwhile, if some of you have any questions, definitely feel free to post the questions in the chat box as well. हम वो questions भी ले लेंगे ताकि उनके बारे में भी हम बात कर पाएं. I will now start with the first company, which is DavinSon Retail. The company manufactures and designs a wide range of high quality ready-made garments, including jeans, denim, jackets, and shirts for other brands. It also distributes FMCG products. Just setting up the IPO, it's a very small IPO, 8.78 crores, all of which is fresh issue at a market cap of 29 crores. In terms of the financials, in FY24, the company did 13.4 crore of revenue and a PAT of like 1.6 crore. So it's coming at somewhere around 16 to 17 PE. So at least at a PE level, it's valued at how you would want it to be valued. In terms of the LM is Navigent Corporate. Just talking about the company now, इस कंपनी की बात करते हैं. मैं probably 2 मिनट ही लूंगा इस कंपनी के बारे में बात करने के बारे में, क्योंकि बहुत कुछ ज्यादा है नहीं. आई वुड बी अवॉइडिंग दिस कंपनी. जैसे मैंने बताया कि ये कंपनी जो है इट मेजरली डज 2 पार्ट्स. इसके 2 काम में, एक तो है कि ये एफएमसीजी का डिस्ट्रीब्यूशन करती है और दूसरा जो है वो जो रेडीमेड गारमेंट्स है उनका मैन्युफैक्चरिंग करके सेल्स करती है ये कंपनी. कंपनी जो है वो 2022 में दे स्टार्टेड दिस कंपनी DavinSon Retail एंड देन 2023 में दे एक्वायर्ड प्रोप्राइटरशिप जो प्रमोटर है उन्हीं की प्रोप्राइटरशिप थी, जो कि बहुत टाइम से चल रही थी, पिछले 10 साल से। उसी को ही एक्वायर कर लिया अराउंड 47 लाख रुपीज देके, और उस कंपनी का अभी आईपीओ आ रहा है कंपैरेटिवली। सो इट जस्ट दैट इट आई डेंट रियली थिंक इट वॉज अ बिजनेस, इट इज समथिंग विच इज बीइंग मैन्युफैक्चर्ड एज अ बिजनेस। क्योंकि आप इसका रेवेन्यू भी देखोगे तो अराउंड 13 करोड़ का रेवेन्यू है, जिसमें से अराउंड 6 करोड़ रुपए तो एफएमसीजी की सेल्स है, और 6 करोड़ रुपए जो है वो गारमेंट सेल्स है। सो इट जस्ट फेल्ट लाइक अ बिजनेस विच didn't exist on paper and was just being made in order to make sure that somehow do a IPO. So जैसा मैंने बताया, कंपनी का दो जगह से बिजनेस आ रहा है, और जैसे मतलब उसमें भी कंपैरेटिवली आप देखोगे कि जैसे चाय वगैरह बेच रही कंपनी 133 lakhs in the year, 1.33 CR is from selling of tea, बिस्किट से अराउंड 1 CR का रेवेन्यू है। और ऐसे मतलब ऐसे एफएमसीजी बिजनेसेस लाइक 50 लाख रुपीज मंथ ऑफ सेल, एंड उसके उसमें भी उनपे ट्रेड रिसीवेबल खड़ा हुआ है बहुत बड़ा। बैलेंस शीट में आप देखोगे इन्वेंट्री पड़ी हुई है 3 करोड़ की, ट्रेड रिसीवेबल पड़ा हुआ है 4 करोड़ का, कैश 1 करोड़ है। और उसके अलावा जैसे एक और चीज जो मेरे को इंटरेस्टिंग लगी इस कंपनी में जब मैं देख रहा था, कि इस कंपनी में ना बेसिकली जो आईपीओ की प्रोसीड्स है उसमें से लाइक अराउंड 8 सवा 8 करोड़ का आईपीओ है, राइट। उसमें से लगभग 1.5 करोड़ रुपया तो कंपनी का जो एलएम है वो आईपीओ कराने के लिए ले रहा है। बेसिकली 1.3 CR इज द एक्सपेंसेस फॉर दिस आईपीओ, विच सीम लाइक 15% तो जो है वो कंपनी का कॉस्ट जो है वो आईपीओ कराने में ही जा रहा है। सो बिकॉज इट्स सच ए स्मॉल साइज आईपीओ, एंड जैसा मैं बोला कि कंपनी का जो रेवेन्यू है ना वो कंपैरेटिवली ऐसा लग रहा है कि बस बनाया गया है किसी तरीके से ताकि आईपीओ कर पाए। और काफी पुरानी, जैसे रेडीमेड गारमेंट्स का जैसे मैं बात करूं, सो एफएमसीजी तो मैं छोड़ देता हूँ कि अराउंड 13 करोड़ की सेल है, जिसमें 6 करोड़ तो एफएमसीजी है, विच आई वुड नॉट think of it's just a FMCG trading business. There would be a lot more businesses which will have a lot more turnover than this company. तो जैसे अब मैं रेडीमेड गारमेंट्स की बात करूं, तो रेडीमेड गारमेंट्स में इनका FY 1920 में 4 CR का रेवेन्यू था, जो कि 2021 में कम होकर 1.5 CR हो गया था। फिर 21-22 में और कम होकर 88 lakhs हो गया था। फिर वो अभी क्लोजर टू द आईपीओ फिर बढ़ा है, लाइक FY 22-23 में 2 CR हुआ है, फिर 23-24 में अराउंड 7 CR हुआ है। So again, it just seems like a company has been stitched together somehow to make some market cap, but still it is so small that the total profit in itself is just 1.6 CR. But still, if I have to talk about what the valuation of the company is, it's coming at like I think 19 P if I take the FY 25 annualized number, and if I talk about FY 24 earnings, तो around 17.5 PE पे आ रही है। बट 30 करोड़ की मार्केट कैप की कंपनी है, कुछ भी इंटरेस्टिंग नहीं है कंपनी में इन टर्म्स ऑफ लाइक anything which is working for the company. So easy avoid. I'm going to skip this issue and probably talk about and especially because there are a few other conflicting issues as well which are kind of coming with these issues. I will be focusing on those companies. With that, I have covered the first company which is DavinSon Retail. अब नेक्स्ट कंपनी की तरफ बात करते हैं। इट ऑल्सो शुड जस्ट टेक 2 to 3 minutes, उसके बारे में भी फटाफट उसको खत्म करते हैं। इंडोबेल इंसुलेशन, the company manufactures insulation products including nodulated and granulated wool, mineral and ceramic fiber nodules, and prefabricated thermal insulation jackets. In terms of the IPO size, the company is coming up with an IPO of 10 crores at a market cap of 29 CR. So like they are diluting 30 to 33% of the company. In terms of FY 24 revenue, the company did 18 crores of top line, and inka bottom line was again like 1 CR. So it's coming at like 29 PE. In terms of the LM is Finshore. So with that, Yash, you have also got a side company for today, right? So do you want to go ahead and cover Indobell Insulations?
Sure, Manish. Thank you for setting it up. So Indobell Limited incorporated in 1972 and have presence for many years, but the main problem is the growth itself is not very encouraging. So what the company does, the company manufactures insulated products, including nodulated and granulated wool, which consist of mineral and ceramic fiber nodules. Then the second product is prefabricated jackets. So the use case or the application of these products are mainly into residential, commercial, and industrial applications where we need to segregate the cooling and the heating of the temperature. One main point is this is a very small issue, raising almost 10 crores, from which 40 lakhs is going for capex, and almost 7 or to 8 crores is in working capital needs. For this point, what I need to highlight, what I want to highlight is, what they should have done is they should have done a private placement with some investors who can guide them too, because 10 crores itself is a very small amount in capital markets, and doing it through private placement have much yielded much better returns, because वहाँ पे investors guide भी करते हैं, plus business help भी होता है उनका due to new tech types and all. तो 10 crores के लिए this issue is not very promising. Also, talking about the capex which they are doing. So basically what they're trying to do is installing 2 more CNC machines which will increase their machining capacity, which means that the improvement in asset turns, as it will increase the amount of product being made in the similar time frame. One more important point is कि promoter के पास 99% holding था. Post issue it will be 65% promoter holding. One of the biggest risk for this very small company is the key man risk. The person guiding or the main shareholder Vijay Verma is almost 77 years old. If I talk about the capacities, mineral fiber capacities consistently 40 to 50% from past 3 years. Plus जो ceramic fiber capacity है, that has shown some utilization, almost 84% in H125 and 73% in FY24. Plus talking about the revenue split, इनका H125 में almost everything was domestic sales. FY24 में 66% was domestic and 33% was exports. So अगर ये exports का भी trend अगर मैं past 3 years से check करूं, तो absolute figures में export is almost degrowing from 10 crores in FY23 to 6 crores in FY24 and almost nil in H125. So most probably let's wait for H2 to see the trend कि अगर ऐसा तो नहीं है कि खाली H2 में they are supplying. Plus one more thing is they have limited suppliers and limited customers, as in कि जो कंपनी है इसके top 10 customers contributes 90% and top 10 suppliers contributes 90% of their raw materials. Also, one very important thing to keep in mind regarding this limit supplier and limited customers is company 30 crore की है खाली, तो मतलब there is not much to expect from a 30 crores company. Or there's nothing to talk about financials as well, because मतलब the expectations from a 30 crores company is very less for me, क्योंकि ये तो अभी मतलब developing stage में है. So I think the idea of coming to an IPO is not a right choice for the company to grow and nurture it. So I think most probably this should be avoided.
थैंक्स यश. यश और मैं बात कर रहे थे और यश कह रहा था कि इससे ज्यादा मार्केट कैप तो मेरी है. But yeah, jokes aside, very quick review. Indobell is going to avoid this company as well. But yeah, with that, we'll move forward to the third issue. This is an interesting company, and this is something which, at least for today, is the highlight of all the SMEs that we are covering. The next two SMEs are interesting, FabTech and Parmeshwar Metal. So सबसे पहले FabTech Technologies की बात करते हैं. The company manufactures pre-engineered and prefabricated modular panels and doors for building clean rooms in the pharmaceutical, healthcare, and biotech sector. It is an end-to-end supplier of the clean room products and technologies for plants. Recent company HVAX had also came in with an IPO, and it also majorly worked in this segment. So should be interesting to kind of compare it with that company. And just setting up the IPO for Rohit, the company is coming up with an IPO of 27.7 crores. All of which is a fresh issue. जो ये मार्केट कैप पे आ रही है 105 करोड़ 105 CR के मार्केट कैप पे आ रही है. So they are diluting like the bare minimum needed 26.5%. In terms of the FY24 financials, the company had done a revenue of 98 crores and a PAT of 6 crores. So it's coming at like 17 to 18 P in terms of FY24 financials. Although FY24 is almost beyond us. Like we are just 3 months left. FY25 is also beyond us. We are just 3 months left in FY25. So market will start probably discounting a lot of FY24 results as well. We know about that. In terms of the LM is Vivro Financials, majorly known for Bondada listing. With that, maybe Rohit, do you want to go ahead and talk about FabTech Technologies?
Thanks, Manish. Thanks for setting it up. Yeah, as you mentioned, this is a pretty interesting company in a space that I think will get a lot of attention and is starting to get a lot of attention. So I'll come to what I think as I go through this. It's slightly complicated, so I'll try to be as structured as I can. So like you said, there's a 25 crore fundraise, of which 14 crores for working capital and 5.5 crore is to fund and acquire or increase stake in one of its, one of the companies that it has a minority interest in, to make it a subsidiary, which is also an interesting point I'll come to towards the end. So what does FabTech do? They basically manufacture, or primarily they were a manufacturer of the modular panels, the doors, these fittings that go into making a clean room, which is used in, say, the pharma, biotech. It's used in a bunch of industries, but for them, primarily it was pharma and healthcare and biotech industries. But what happened was, so this is actually part of a larger group called the FabTech group. And sometime back, they had done some sort of clean out of, which entity does. It's still fairly complicated, but broadly speaking, they have two entities in this sort of FabTech group that we should be concerned with. One is this company called FabTech International, and there is FabTech Cleanroom. FabTech International, you can broadly treat it as the group that does the international EPC projects. That's actually an even bigger company than this one. So their international operations are larger. And FabTech Cleanroom focuses on the domestic operations, along with having a lot of the manufacturing of the products that go into the EPC of the making the clean room. So a clean room itself is basically a controlled environment, some kind of a controlled room setup that ensures there's a low level of pollution, dust, microbes, whatever, chemical vapors, whatever, all of those things that many of these precision and sensitive industries need. So obviously industries like pharma is obvious, but you also need it in things like, say, semiconductor industry, you'll need it in food industry, you'll need it in, say, data centers, for example. So a lot of the good, fast growth sectors and a lot of the old sectors that are professionalizing will need more and more clean rooms, or will start moving into this sort of clean room mindset, as they sort of progress. So I think there's a very structural tailwind to this business. To any clean room, there are three parts. There is the HVAC, which is basically the air system. There is the actual partition, the physical doors and the things that sort of you put together to make the physical entity. And then there's the electric systems, which are your panels, lighting, all of that. This company, interestingly, apart from obviously putting and installing and putting all of this together, they actually do the first two things themselves. There's the HVAC systems, which through a couple of their, investee companies, or where they have minority shareholding, they actually make this, air handling units. And they also are an investor in this company called Kelvin, which makes these HVAC system integration. Apart from that, this entity, FabTech itself, does the modular partitions, the doors, the panels, and so on. And they're obviously not very interested in the electrification, which is probably the most peripheral of these three. But I think the main point is they are basically involved in two of the three parts that make up, the clean room, apart from just the installation service itself. Today, for FabTech, about 85% of the business comes from pharma. All the big pharma names in India, basically every single big pharma player in India works with them. But another 15% comes from these other segments as well. So they have, clients like, say, Bosch. They have clients like ISRO for satellite manufacturing. They have HAL as a client. They have Colgate for toothpaste manufacturing. So they have a bunch of very interesting clients across the various segments that they do. But of course, still today, 85% is pharma. But the good thing is their non-pharma has been growing. So it has gone from about 5% to 15% over the last 2-3 years. In this, one interesting thing is, I think in one of the calls they mentioned that they also secured a 6 to 7 crore order from CG Semicon, which is CG Power's Semicon company, and that's their first foray into the Semicon segment. I already mentioned about this group structure. You have this FabTech International and you have this, and there are a bunch of other entities. You can ignore that. But even within their own entity, they have, other entities that sort of make up this FabTech clean room itself. The two important ones are, there's one called Advantech, where they own a 26% stake, which does this upstream air handling units. And there is Kelvin, which today they own 33% stake, which does this HVAC system integration. So one of the objects of this issue is to take this 33% in Kelvin to 51%. That makes it a subsidiary. I'll come to the importance of this at the very end, but I think just an important point to highlight right now. Today their order book is almost 220 crore. I think 160 crore is just FabTech and the rest is with some of these other entities, which is very decent given that their revenue last year was about 100 crore or so. And they generally have a 4 to 8 month timeline for delivery, which means there's a lot of visibility to revenue in the very short term. Typically for a pharma project, their bidding is 5 to 15 crore, but these new segments that they're going after, they can have much larger orders. So 50, 60, 100 crore orders, like say semicon data centers and so on. And any kind of order win, I think that comes here will be a huge re-rating trigger for a company like this in the future. So one thing, like when you just optically look at their numbers, you'll see that from FY23 to 24, their revenues dropped from 120 odd crore to 100 crore. Even in FY22, it was, north of 110, 115 crore. The reason that they mentioned for this is that there was a lot of backlog due to COVID. So 22, 23 were artificially inflated, and FY24 is sort of the actual sort of, it signifies what their regular revenue is. There was also apparently some spillover of an order from FY24 to 25. So that has already kind of come in the Q1 of FY25. It's there in those numbers. But altogether, they're saying that their FY25 is expected to be very decent. There seems to be a slip of tongue in one of the interviews where they say they'll do 200 something crore in FY25, which is not going to happen. But I think they should do 120, 140 crore or, in FY25 with a good 10 to 12 crore kind of pat. It looks like they're, well in line to hit this. One point here is while their balance sheet looks decent on the operating cash from an operating cash flow standpoint, there is one red flag here. They do have fairly high receivables about 10 years, about 3 years, which is north of or around 10 crore. This number has come down a little bit, but it's still there. Some of it is because they do have some retention money, but this was not asked in any of the interviews, so I'm not sure, and maybe we'll also try to reach out to the management and see if we can get some clarity on why they have such high receivables above 3 years. There was a pre-IPO done some time back, which looks like with fairly impressive people, including who I think is Dr. Farooq Patel from KP Group, because it just says Farooq Patel. I don't know any other person who does an SME investing, so I'm assuming it is him. There's some other interesting people who also say their funds also turned up in the anchor list. This company is coming at just less than 10 PE for FY25. I assume, 10, 11 crore PAT. It's coming at less than 10 PE, 9.5 PE. I think that is extremely, extremely attractive. This sector will see fancy given that it is at an intersection of very, very interesting sectors. You've got the EMS play, you've got the data center, semicon play. All of these will come in going forward. And the promoter has mentioned that he's fairly confident of sustaining a 35% odd growth, from here. Today, Manish mentioned that there's this company HVAX that came. HVAX actually came with no fanfare. It listed well. It listed okay, I think just marginally up, but then it went up initially. Just 2-3 days ago, when this company's IPO and RHP got confirmed, HVAX has just shot up in the last 2 days. It's up almost 40% in the last 2 trading sessions. So HVAX today trades at around 23 times trailing. You can say it's about 18, 19 times FY25. While HVAX is simply a pure play EPC player. They don't even have the capabilities, manufacturing capabilities, the upstream capabilities. Kelvin, for example, at the end of the day, it's an HVAC player. HVAC, though, clean rooms is just one part of what HVAC, supports. HVAC as a segment has its own piece. And if these guys own 51% of this company going forward, the Kelvin business itself will get its own multiple and its own valuation. So I feel this company is far stronger and much better positioned than somebody like an HVAC. So this should trade at a premium to this company. So I see a lot of upside. Just on fundamental basis, I see a lot of upside when you compare this with an HVAC. Other thing I mentioned was, since they're acquiring 51% of Kelvin, going forward, Kelvin's revenue and bottom line will get added directly to the P&L of this company. So right now it's 33%, so that does not show up in the P&L. It'll come as a minority profit or whatever. But once it crosses 51%, you will get all of Kelvin's revenue and all of Kelvin's bottom line, and then there'll be a subtraction for that, 51%. So the 49% is owned by someone else. But it will boost the consol revenues and bottom line. Kelvin, for reference, did 30 crore just last year. So that's not a small number given this company did 90 or 100 crore. So I think the consol numbers will start looking really, really good going forward. I found the promoter also to be very impressive in whatever interviews I could see. Decent set of anchors, also not the usual flipping anchors. There are 2-3 names that actually do hold, like Mavera and Invicta. Both of them are decent, and they actually participate in a lot of prefs, which means they're not a short-term flipper kind of anchor. For me, I'm overall very bullish. I think personally it's a slam dunk apply, and I feel it'll be a very interesting candidate on listing as well, even if it lists at 90%.
Got it. Thanks so much, Rohit. If reading just few questions on top of my head, which I can see in the chat box. Pehla to, as you said, that trade receivable are 20 CR. I'm assuming there's no reason particular. You already covered that. We'll try and find out a reason, but nobody asked that in the interview. And second question, any litigation risk with respect to this company? Because I see a few questions with respect to litigation. Anything that you found on that front?
There's one, but the litigation is not with this entity. The litigation was with the other, with their international group entity, FabTech International. So as a part of that, and that's a much bigger company, they have 250 crore revenue. As a part of that, the promoters, the directors are the same. So the director is also implicated in that litigation. It's some 7-8 crore, but it doesn't have an impact on this company itself. It is on the other entity, FabTech International. It's not on FabTech Clean Rooms. So it's just an indirect impact on the promoter, because the promoter is also named on that because he's a director of that other company. But yeah, it shouldn't have any impact on this company.
Got it. So seems like a good company to apply at least at IPO price, right? With
Yeah,
everything.
at IPO
So I had a
price,
question.
go on.
Like it's coming at like 10 P FY25, right? It's
Correct.
a Vibro issue.
Yes.
Something. And
Something like
GMP has also been like this company has quite a bit of GMP, right? Like this company also had a lot of fanfare going for it in the gray markets, if I'm not
Sadly,
wrong.
yes. I mean, it was initially 35%, but suddenly, I think just today or earlier yesterday, I saw that it had reached 80-90%. So there's no escaping where it will list. But yeah.
Got it. One more question from my end, maybe the last question from my end. How do you compare them? Maybe you gave a indication that, but like how much premium, if I was to ask you to quantify a premium on how much premium should it get compared to HVAX in some way, shape or form? Uh, like if you could explain why is it superior? You said that this is superior because they are doing all parts, whereas HVAX is just a EPC contractor in clean rooms. And if you were to quantify that, like how much better are they and what should their valuation be? And again, not asking because maybe what is happening is that HVAX is overrated right now because this one's coming. So that may go down, but where do you see like the valuation difference between the two?
See, so there is a positive effect and there's a negative effect. One thing is HVAX. So HVAX is a pure play EPC, but HVAX also does international clients. Whereas in FabTech, unfortunately, all the international clients goes into that other entity, that FabTech International Private Limited or FabTech International Limited. So this FabTech only deals with their domestic clients. So generally, international clients have a slightly better margin profile. So you could say that that's a slight negative for this company compared to HVACs. But at the end of the day, this is a fully upstream integrated business and getting more and more upstream integrated as they acquire larger stake in Kelvin, their stake in Advantech. And they're very clear, the promoters are very clear that they want to keep doing more inorganic sources of either strategic acquisitions or, just revenue kind of acquisitions. So I think the way the promoters are thinking about it and executing, I don't know the equivalent plan for HVACs. I don't think there were any sort of interviews the way there are for this, but that didn't come out as anything. It didn't come out standing out in the case of HVACs. Whereas in this, there's a lot more information, and at least how they're thinking about the business to me is fairly impressive and fairly solid. So for me, the fact that they have a lot of the backward integration, they're getting more and more into that upstream piece. Plus, of course, they are fairly capable as a group. They have, far more exposure. They have very, very high quality investors. So my sense is this will get a decent premium over a HVACs. And if this company can win 1-2, orders or announce 1-2 orders in non-pharma segments, I feel because that will be a big unlock, huge unlock, as in it's a kind of unlock that can 2-3x the company in terms of just how it is viewed and rated. So whether the re-rating will happen on day one post-listing, I don't know. But if this company can exceed this, at the end of the day, you're investing, right? It's no guarantee that the company will execute and deliver. But there are a lot of pieces in place, including how the company is thinking and wanting to execute, that if they happen, those are going to be re-rating triggers for it. And you have to bet that, okay, this company is going to achieve those things and, hold for that event. Not saying that this is suddenly going to be at 40 times when HVACs is at 20 times on day one. That is super unlikely to happen.
Got it. Understood. With that, we have covered the third company, FabTech. Just want to highlight if someone has joined in between, हमने 3 companies की बात कर ली है. We started with a company called DavinSon Retail. Then we moved to the second company, which was uh, Indobell Insulation. Now we just covered FabTech Technologies. After this, we'll move to Parmeshwar Metal and then talk about the one Mainboard standard glass, which is the interesting issue and the highlight issue for the day. But before that, if you're joined in between, आप YouTube channel पे भी देख सकते join कर सकते हो. Link is in the pinned comments. आप वो channel पे I will put the space there and you can listen to the IPOs fundamental reviews at your own pace. With that, I will move on. And I see one question coming up consistently, which is with respect to Indobell. With respect to Indofarm, we have already covered Indofarm last week. So if you want to listen with respect to that company, our reviews remain the same, nothing changes. So go ahead and listen to Indofarm on YouTube for last week, and maybe with that we'll move forward to the next company, which is Parmeshwar Metal. Just setting up the company. The company manufactures copper wires and rods by recycling copper scrap. Its manufacturing unit is situated in Dehgaam, Gujarat. Just setting up the IPO, it's a 25 crore IPO, all of which is a fresh issue. And the market cap for the company is 93 crores. It's coming at 93 crore market cap. In terms of the financials, the company did a revenue of 1100 crores. You read it right. You listened right. 1100 crores, and the PAT is 7 crores. So very thin PAT margin business. In terms of the LM is Beeline Capital. So just talking about the company, if you don't listen anything आपने कुछ भी नहीं सुना, तो just think of it as a peer to a recently listed company, Sunlight Recycling. So basically what the company does is, company is in the business of manufacturing copper rods, wires, strips and other accessories by recycling the copper scrap it purchases. It started in 2012 and the company, as I said, operates in Dehgaam, Gujarat. Copper in itself is one of the most recycled metals and it's a growing industry क्योंकि क्या होता है कि वो copper नया नहीं बन सकता, right? So it's a much cheaper and sustainable alternative to procuring primary sources. It's better कि आप उसको recycle करते रहो. So there are a lot of players in the market who just recycle and use and create copper wires etc. and sales it and उसकी sale करते हैं. So majorly ये भी player वैसा है. Mostly इनकी sales जो होती है गुजरात और दादरा एंड नगर हवेली से around 65-67% of the business comes from that. If I talk about the business is very simple. They make two things. One is just let me go to it. Copper wire rods, which is like 85% of the business, and the other is they directly sell the copper scrap, which is 65% of the business. Not a lot of difference essentially in terms of like how you will look at it in terms of where the company is currently operating. 87% capacity utilized है company के plant की. और ये जो अभी आईपीओ कर रहे हैं इससे बेसिकली ये अराउंड 2 CR यूज करेंगे. सो जैसा मैंने बताया इट्स 25 CR आईपीओ, राइट? सो इसमें से 2 CR ये यूज करेंगे फॉर सेटिंग अप अ न्यू मैन्युफैक्चरिंग फैसिलिटी. 2 CR यूज करेंगे टू रिनोवेट देयर फर्नेस एंड 13 CR यूज करेंगे फॉर वर्किंग कैपिटल. दे नीड लाइक 100 CR फॉर वर्किंग कैपिटल बिकॉज इट्स अ वेरी वर्किंग कैपिटल इंटेंसिव बिजनेस. जैसा मैंने बताया 1100 करोड़ उनका रेवेन्यू है, तो कितना भी एफिशिएंटली घुमा लेगा पैसा कोई आदमी, तो अगर वो 4 बार भी घुमा लेगा साल में 5 बार, तो भी अराउंड 200 करोड़ का इनको वर्किंग कैपिटल चाहिए, राइट? सो उसके लिए 13 करोड़ उसमें से वो वर्किंग कैपिटल के लिए यूज करेंगे. अगर मैं वेरी हाई लेवल अगर बिजनेस की बात करूं तो कंपनी पे ना थोड़ी बहुत कंटिजेंट लायबिलिटी भी है और थोड़े केसेस भी चल रहे हैं. सो कंपनी पे टैक्स केसेस चल रहे हैं अराउंड 42 CR का, जिसके अगेंस्ट एग्रीगेट अमाउंट है जो कि कंपनी को पे करना पड़ सकता है इफ दे लूज द केस. एंड देन द कंटिजेंट लायबिलिटी आल्सो, दे हैड अ कंटिजेंट लायबिलिटी ऑफ अराउंड 8 CR in a disputed GST matter, but I'm assuming that's all will be solved and that's just the cost of doing business. In terms of like, if I talk about the trade receivable, they have a big trade receivable of around 20 CR on their balance sheet and 24 CR stuck in inventories. But again, that's looking at the size of business that they do. They do a business of like 1100 crores of revenue in FY24. Basis that it just looks okay. और जैसा मैंने बताया रेवेन्यू फ्रॉम ऑपरेशंस इज लाइक 1100 crores, पर उसमें से पैट जो होता है वो बहुत कम होता है. लाइक दे डिड 7 crores in PAT in FY24 and in FY25 in the first 7 months until October, they have done like 5.7 CR. So they should close at somewhere around 10 CR in FY25. If I talk about where this company is coming, this company is coming in at a pretty cheap valuation. This company is coming at like 93 crores का market cap पे आ रही है. जो कि, which if you look at it, like I feel you should look at these companies because revenue इतना ज्यादा है और PAT इतना कम है कि PAT multiple पे देखना doesn't make sense. But if you still have to look at a PAT multiple, the company is coming at like, let's say, a PAT of somewhere around, just give me 1 minute, let me see. ठीक है, पैट मल्टीपल की बात करता हूँ, बट बिफोर दैट इफ यू लिसन नथिंग एल्स, प्रोबेबली जस्ट थिंक ऑफ इट दिस वे. बहुत सारी कंपनी है जो ऐसा काम कर रही है. जैसा मैंने बताया, सनलाइट है, राजनंदिनी मेंटल है, भाग्यनगर इंडिया है. सो जब ये कंपनी जब सनलाइट रिसाइकलिंग आई थी तब हमने ये देखा था. सो बेसिकली यू कंपेयर दिस कंपनीज एट अ मार्केट कैप टू सेल्स मल्टीपल की कितना मार्केट कैप है कंपेयर टू सेल्स. So Rajnandini and Bhagyanagar were at like 0.3, 0.23. So we were hoping that Sunlight would also probably reach there. But Sunlight came at like a zero point 0.1 market cap to sales and then got re-rated to 0.15 market cap to sales. I think this company should also pretty much do similar. Like it should just be re-rated to that Sunlight Recycling. So if I just put in a Sunlight Recycling ka market cap to sales ka multiple and think of it where it should be, so it should be at like 157 crores ki basis the 1100 market crores sales they have. So अगर वो वाला number में रखता हूँ तो उस हिसाब से the listing gains come to like 50-60%. Above which I don't think there is a lot of upside left because there are a lot of these players and like there is no specific mode for any one player in this industry. So I would look at it as a fair out and out listing gain play where I would play this for like 50-60% listing. Once it reaches there, that's when I will comfortably exit and not look at this company again. That's what my thought process would be for Parmeshwar Metal. Just talking about मेरे को एक PE की और बात बतानी थी, right? Where this company is coming in at. So this company is coming at a PE of FY24 PE of 12 and FY25 annualized PE of 9.5, which is very cheap. But again, the sector in itself doesn't get a very high PE. That's the whole point. Like Sunlight Recycling in FY24 is at 18 PE. So ये 12 पे है. So somewhere around 50-60% gains and then just peg it to a Sunlight Recycling is I'll say how I'll look at it. So definitely apply for listing gains and as soon as it matches, at least I would do this where I will get out if it matches the Sunlight Recycling valuation. That's what I'm planning to do. It's a beeline issue, so there can be some interest because of that. But Sunlight was also Hame Securities. We saw market didn't really care about that. So that is what my review is with respect to a Parmeshwar Metal. In terms of the anchor list, the regular names, I didn't see anything super interesting in terms of the anchors as well. But let's see. That's what my review is with respect to Parmeshwar Metal. And then with that, we can close and finally move forward to the one last company for the day. So the last company that we'll talk about is a mainboard company. The name of the company is Standard Glass. उसकी बात करते हैं. So the company is a manufacturer of engineering equipment for pharmaceutical and chemical sectors. It manufactures specialized engineering equipment using glass-lined materials, stainless steel, and nickel alloy. Talking about the company IPO is coming up with an IPO of 410 crores, out of which 210 crores is a fresh issue, i.e. सिर्फ 210 crore company के पास जाएंगे and around 200 crores promoters are taking a partial exit from the company. It's coming at a market cap of 2800 crores. So 410 crore raise on a 2800 crore raise, on a 2800 crore market cap, so diluting around 15% of the company. In terms of the FY24 financials, company का जो revenue है वो 550 CR था और जो PAT है वो 60 CR था. So company is coming at a 2800 crore market cap with a FY24 PAT of 60 CR. So coming at like 45 PE, something like that. In terms of the LMs are IIFL and Motilal Oswal. So with that, Tanmay, do you want to go ahead and talk about Standard Glass?
Is my voice audible?
Yes, sir.
So Standard Glass Lining Technology Limited is one of the top 5 manufacturer of glass, stainless steel and nickel-based specialized equipment manufacturer for pharmaceutical, agrochemical sectors. The company is one of the top 5 manufacturers of PTFE lines and pipelines with 23.3% market share in India. Now, basically, what this company does, the company makes products like reaction systems, storage, separation and drying systems and vacuum pumps. मतलब जब एक फार्मा कंपनी एक एपीआई को आप प्रोसेस करके कन्वर्ट करके जब आप टैबलेट या कैप्सूल्स में कन्वर्ट करते हो, तो उसके लिए जो स्टोरेज सॉल्यूशंस होता है, जो वैक्यूम सॉल्यूशंस होता है एंड जो कन्वर्जन सॉल्यूशंस होता है, तो उसके लिए जो बहुत बड़े बड़े ग्लास के इक्विपमेंट्स लगते हैं, मतलब इट्स मिक्सचर ऑफ 2-3 मेटल्स एंड ग्लास ऑफ वेरी लार्ज साइज दैट द कंपनी manufactures. So the company is an end-to-end service provider, which provides the designing, engineering, manufacturing, assembly, installation, and the post-installation turnkey solutions for the operations of the installed equipments. So the company is raising 410 crores, 210 crores is a fresh issue and 200 crores OFS. Please note that 40 crores has been raised as pre-IPO. So basically this is a 450 crore raise and 210 will go for 250. As 40 is done as pre-IPO, the IPO size comes at reduces by 40 crores. So the company is repaying its working capital debts of roughly 130 crores. The company is spending 40 crores towards capex. I'll explain the capex at a later point. 20 crores is been embarked for unidentified acquisitions, especially for acquiring new technologies, new segments in new sectors, and the rest 20 crores is with GCP. So this company is before coming to its new facility, let me just give a sense of its existing facilities. The company has 8 facilities till November, which has an aggregate capacity of 4 lakh square feet. The company has already commissioned a new facility very last month in December, which was additional 1 lakh, which hasn't been disclosed in RSU but said in the interview. So we can consider it as an official information only. So the company has total 9 facilities with 5 lakh square feet area of manufacturing these equipments. The company is setting up a 10th greenfield manufacturing facility, which will be approx 3 lakh square feet, means existing would be 5 lakh and new 3 lakh. By the way, this is a 9 lakh square feet facility that it has been divided in 3 different lines. First set will be of 3 lakh, then 3 lakh, then one more 3 lakh. So the company is planning to enter new segments like heavy engineering, food and beverages, oil and gas. So it would be basically manufacturing this glass equipment for some more critical and advanced sectors, which it wasn't present at this point. The company has already bought and owns 38 acre of lands. So it will be setting up the facility on on that land. Let me tell you that company has already raised 170 crores last year, financial year, from Asahi Glass, Japan, which is world's largest glass related products manufacturer. And there is one more listed company, Asahi India Glass Limited, I guess 5,000 crore market cap, if I'm not wrong. Its parent company, its Japanese parent, has invested 170 crores in this company, out of which they have already spent 35 crores for acquiring new technologies in new segments, and the rest 135 crores they have done an FD. So the company is raising this 40 crores for capex from the IPO proceeds, and that rest 135 crores, and it will get some more out of the internal accruals. So the company is planning roughly around almost a 200 crore capex. The company is telling that The company has a potential to generate 3 times revenues after the capex is completed. मतलब basically 5 साल में 3 गुना करने की बात चल रही है, because next to next year should be the commencement of the first 3 lakh square feet of the new facility. So it would be aggregate level 8 lakh. I'll come to its financials. FY23 was 498 crores, top line with 53 crores bottom line, and FY24 was 544 crores with 60 crore bottom line. Don't know what has happened, but the promoters or the management has their tongue has been slipped, and they have said the expected FY25 numbers. They said on television that it's 650 to 670 crores of top line, and they haven't said the PAT, but it indirectly translates into roughly 78 to 80 crores PAT. This company is available at a market, taking its IPO at almost 2793 market cap, 2,793 crores. FY24, it is roughly valued at 46.6 times. FY25 at roughly 35 times, and FY26 is estimated at 25 times. Now one will say that there is a company called as GMM Fodler, which is available at roughly 30 times. So why should I buy this company at 47 times? So I'll make some points here. The company has signed an exclusive agreement with GLE Heiko, which is associate entity of Asahi Glass Japan, for supplying glass-lined equipments for this sheet and shell type front type tube exchanger here. So we have recently seen that there was a company, Karen Heat Exchangers, which used to make the small heat exchangers for the AC and refrigeration industry. So this Asahi India will make a very large size of heat exchangers. For that, the glass equipments which are required as a raw material will be supplied by Standard Glass. The exclusive agreement has been signed already. There is one more agreement signed. The company's name hasn't been specified, but there's a company in the US which is basically a very large scale glass equipment supplier to almost 60,000 companies globally. It also has signed agreement with this company. Now, if I see this company, it's a very niche kind of pure play manufacturing cap good company with very good prospects, and it's in a very niche segment. And I'll just say the anchor book was very small, I guess, almost what we can say, almost 120-130 crores kind of an anchor book. But if you see the names, each name was there were just 10 names. All the 10 names were very good. One was Amansa Holdings, which is managed by Mr. Akash Prakash, who is based in Singapore. They have already invested 40 crores pre-IPO and 35 crores additional in the anchor book at same rate, 140. So they are basically now owning 2.7% in the whole equity in the whole company. The second largest anchor was Claris Capital. Who is this Claris Capital? There's a private equity fund called as Chris Capital, which was a major investor in Mankind Pharma, if everyone can remember. It is managed by Mr. Ashish Dhawan as investor. So he was owner of Chris Capital. It's not a foreign private equity company. It's an Indian company only, but just the name is Chris Capital. So Ashish Dhawan's investment, or what we can say, AIF company is called as Claris Capital. So they have taken a good chunk in the anchor book. Few more investors were ITI, ICICI Prudential, Prashant Jain's 3P and equity fund. So anchor book was pretty solid for such a small size of IPO. And we can clearly see that promoters are not willing to dilute their stake in the IPO, because they know the value of their company is pretty more than this. So what I personally feel is this company will get a very good multiple. I'll come to its peer competitors. Okay, there is a company GMM Fodler. So this company has a few issues in it. So why this company isn't getting a good valuation? The first reason is its promoters, Patel family, is trying to exit or partial exit the company from last 2.5 years, but they are not getting success to exit the company. The second is the growth is not good. The efficiencies are getting bad. They are losing market share. There are few block deals recently. The liquidity has increased. So overall, this stock hasn't been doing well from last, I guess, 3 years. And the second of its peer is actually Glasscoat, which trades, I guess, 70 times almost FY24. And if I check out the valuations forward, this company is coming at roughly 50% discount. So actually Glasscoat and this company can actually get compared, because in half of standard glass segments, actually Glasscoat has a good presence. So what I feel is the promoters are pretty good. The segment is very niche. Okay, I don't feel next 5 years we are going to see a listing of this similar kind of a business. They have good agreements. Two things said by promoters that in historically we have grown at 25% CAGR, and we are pretty confident that we will be maintaining that. And he has said openly that we will be maintaining double-digit growth for next 10 years, and whatever happens, we are going to do that. So this just tells key, and I'll not be surprised if this company enters in some very hot sectors, I guess 2-3 quarters after listing. So everything is on cards. So it's a pretty good company. 25 times FY26 is not at all expensive, as seeing the company's quality prospects, and even the financials are also pretty good. The company is also aiming to increase its export from, I guess, 7% to 15% this financial year, and eventually 30%. So the margins will also increase. The company is reaping 130 crores set from there. Also, they'll save roughly 11-12 crores a year. So seems pretty good. I'll be applying full force. Personally, I'll be applying HNIs in it. And I'll just mention one thing, that whole day I personally was traveling, so my review might not be that energetic like every day. So please excuse me for that. Thank you.
Thanks, Tanmay. एक मेरा question है to start with. So you mentioned their agreement with Asahi, right? And so how does that impact? Because from my understanding, someone having an agreement with Asahi, and if they are able to crack that Japan, then essentially the whole world opens up, because Japan is a technology leader in this, right? Can you
This is,
just double dive on
thank you
that?
for mentioning that. Actually missed that point. I'll explain that in brief. That's a very pretty good point. So, Asahi India, see, first of all, I'll make some background here. See, this equipments, I guess there was a data, unverified data. I'm not sure from where I saw that, but world's almost 25% to 30% glass equipments of this segment are supplied to Japan. Okay. And Japan has extremely strict level of compliances to ensure the qualities. And see, this actually segment is a bit on a critical side. Just think there is an API which is going to get converted into a pharmaceutical supplement or some capsule tablet, so drug. So the criticality increases here. So there should be very strict norms for qualification or the quality check of these products. So some industry experts say if you are ready to, if you are supplying anything regarding this sector, especially the glass equipment to Japan, then whole world is open for you. And the company has already received a small order from Japan, which they are set to deliver, I guess, next quarter. And if that order is qualified, whole Japan market and the whole globe is open. Now, I'll just come to the Asahi India part. See, the Asahi India is not just 170 crore investment kind of an agreement. There are two segments in it. The first is the monetary. The second, three segments. The second one is what we said was the exclusive agreement of that supplying of that glass equipment for heat type exchangers to. And the third main part, which I just missed to mention, Asahi India will be training the employees of Standard Glass to manufacture some more better products, and they are also entering some very new segment which will have very good margins and very untapped market. So I guess there has been a agreement where Asahi India, which has I guess 6-7% of the royalty from the sale of those a particular kind of the equipments manufactured by them combinedly. So that's also a very large market. And see, if MNC with global leadership is coming to your company and saying that we will train all the employees and just make few good products, when its own subsidiary has been listed in India, which is of a bit larger scale. Yes, the segments are different, but which is also into the glass equipment manufacturer. So this tells me what qualities this as a company has. And yes, I feel I've covered that, and I'm pretty excited for this company. I personally feel that this company should have $1 billion market cap in like let's say 3 years.
Got it. That's a big statement considering that the company is coming at like 2,800 crores market cap. With that, maybe we have covered standard glass. I don't think I have a lot of questions. This seems like a slam dunk apply. मेरा क्वेश्चन जो है वो प्रायोरिटी ऑर्डर पे बिकॉज क्वाड्रेंट टेक भी आ रही है सो मे बी आई विल आस्क दैट बट बिफोर दैट रोहित डू यू हैव एनीथिंग ऑन स्टैंडर्ड ग्लास
No, man, nothing. I've not studied it.
Okay. So, Tanmay, my question to you is, if you could just in a minute talk about Quadrant Tech and what are you planning to do between Quadrant Tech and uh, this company, Standard Glass, because money can't be used. So, if let's say someone has just money for one, what should that person do? And that someone's me. So, keeping that in mind, how would you kind of and I'm assuming this is a question which a lot of people will have and they'll thank me for asking this, but how do they prioritize between Quadrant Tech and Standard Glass?
So there is one more main board opening the very next day, on which standard glass is opening. Quadrant Future Tech, as of now, is just a cables manufacturer for the locomotives, which is in common terms called as railways and the defense. Okay, so as of now, it's just a cable manufacturer with 120-30 crore, 150 crore top line with 12 crore bottom line at 1100, I guess, valuation. But the play in this company is a bit different. The company has done an agreement with a Railtail Corporation, listed Railtail Corporation, for supplying Kavach systems, which in technical terms we call as train signaling and controlling systems. We have also already read the news that in the last like 3-4 months there are 4 or 5, I guess half a dozen very major railway accidents, especially in the Bihar West Bengal region. So the urge of taking this cover systems to majority locomotives has been increased by a very large and good margin. So this company has got a 960 crore order from Railtail to supply cover systems, and they have already working on this technology, I guess, from 5 years to 2020, so almost 5 years. So but there are 2-3 things in this company, in this stuff key. They haven't ever supplied cover systems. Point number 1. Point number 2, the management, what I could hear was pretty, I won't say confident, but if you haven't executed anything in your life, you cannot be confident on the speech, but they were looking capable to execute. And that 960 crores, I'll say it's after tax. So if you just move, it comes at 840 crores. I'll just give one more breakup. Roughly 70-72% is Kavach and rest is DPC work, which Railtail itself will do because it's an agreement. So Railtail will do the EPC work, 28%, and the 72%, 70% will be roughly cover system. मतलब roughly 600 crore के करीब पकड़ लीजिए, 600 crore revenue, and whole of the contract is expected to get completed in FY26 only. Okay, so FY26 में it should get completely commission, मतलब पूरा का पूरा जितना इन्होंने ऑर्डर दिया पूरा खत्म होना चाहिए, otherwise the whole payment will be cancelled. This is the term set by Railtail. So if you just take it on an aggregate level, the company is almost aiming at like 750-800 crores top line with likely 80 crore market, 80 crore PAT, so like roughly 13-14 P. So it's an interesting kind of a company. We will discuss this in very detail at a later point, but thing to note is it has 10% retail, so and 15% HNI, so getting allocation in it will be very low, and the issue size is also 290 crores, and I feel that it can fetch very, very high GMP. So it will get a good amount of interest and the allocation chances will be pretty low. Eh, so I feel that the investors who have money for just one should go with Standard Glass, undoubtedly.
Got it. You have set up Quadrant Future Tech quite well. We will talk about it in our next space as well. But it's a company which I have been looking forward to and I was waiting for. I know that it's something which should have a lot of interest in the market. There will be a lot of people, and especially I was looking. There were a few avoid recommendations for it because people were looking at it in terms of like prior companies. It is one of those companies where you cannot look at it at a trailing PE. You need to look at it in terms of what is the forward projection and what the company is planning to do in the future. We'll talk about it in our next episode along with a few very good, interesting SMEs as well. I know BR Goyal infrastructure is due, and then a couple of other SMEs are also due. There is this one SME which is the raise, all of the raise is worth 1.92 CR. We'll talk about that, Avax Apparels. And then we'll also talk about Delta Autocorp, which is one other decent company. And then Rohit has promised to cover the infra trust, capital infra trust in quite detail. So we'll do that as well in next episode. But yeah, that's something which
I'll interrupt. I had a small question. I feel my voice was not getting there. So this SME FabTech clean rooms, I want to add, or once it's a question kind of a thing. There was a DRHP filed, I guess 3-4 months back called as FabTech Technologies Limited Mainboard IPO with, this Unistone was the LM. It was roughly, I guess 200-250 crore Mainboard IPO. And I just saw in this, FabTech clean rooms RHP, the group company was mentioned FabTech Technologies Limited. So I feel their parent company or associate company, I'm not sure, but one of the promoter group entity will get listed, I guess, next month. So, if Rohit Bhai has any idea what is the difference of the business, what is the differences in business of both, and that could have given some clarity. But let's see.
I think I covered it. I covered it briefly. So there is this entity, which is the Mainboard entity, DRHP wala jo file, that focuses on the international business. So they do the same thing, but they're the international EPC arm, while this one that is coming is the domestic one. So that's broadly how they have structured it. That's actually a bigger business, 200-250 crore top line, whereas this does about 100 crore top line. But yeah, they're the same group. They're not subsidiary related. They're group company.
मतलब जो international वाला business है, that is the Mainboard. Okay.
That is the Mainboard, correct.
Understood. Thank you.
And this company does supply products. So this company is also the manufacturing entity. So this supplies products. So you'll see related party transactions, but otherwise they're just group entities. They're not, there's no common shareholding, as in one doesn't own the shares in the other.
Understood.
got it. With that, we can end today's space and we will see you in next space. Thank you so much, everyone, for joining.
Thanks, everyone.
Thank you.